Okay, good morning, good afternoon, and good evening, everybody. No matter where you are in the world right now, thank you for joining the second day of our webinar around agricultural investment presented by Pacific Trade Invest New Zealand and ACCOMODATING out of Indonesia. Now, we know there has been a lot of new people join us today, so welcome. And with that, what we're going to do is just give a little bit of a recap on the topics discussed yesterday. But don't worry, don't feel as though you're going to miss out on anything. We'll certainly send through all the information to you after this webinar series concludes this afternoon. But I will go through, I guess, at a high level, some of the areas that we covered to give a bit of context to today's session and what we're going to be covering off as well. And Arta Marie will give a little bit of a reintroduction or an introduction and a reintroduction of themselves before they present. So thank you everyone for joining us. And look, I'll start by doing a bit of a recap. Starting yesterday, I guess session 1.1, we started talking about the global trends in agriculture. The drivers, the trends at a national level, for example, are the things that we all know about. Areas like the size of the market, tax rates, the infrastructure that's there, the port facilities, etc. Wages, so the cost of production, it's a key component, politics. And then we went into, I guess, a little bit more detail around things at a project level. So what are the investors really looking at? What's important to them? Of course, return on investment is important for them. The financial risk, understanding what that particular financial risk is and how they can mitigate is important. But the thing, I guess, that I walked away yesterday, the biggest, I guess, trend that was a little bit, maybe not surprising, but I think it's great. And I think this is really important for the future, is sustainability under the ESG, I guess, practices of environment, social and governance. And this is important because there are a lot of people out there, a lot of customers out there right now who will not buy products that don't have certain sustainability aspects attached to them, or you're not going to get the same price as you would from other companies that would be following the sustainability aspects. So that was a really key takeaway from the first part of yesterday's session. We then went through the 17 SDGs, which is Sustainable Development Goals. Now, I won't go through all of them right now, but you will have these, of course, on a deck very soon. So just to give you a bit of a flavour for what they are, things like gender equality, clean water and sanitation, climate action, etc., are all part of the 17 Sustainable Development Goals. We then went through private sector investor requirements in relation to performance standards. Now, the IFC have a set of benchmark standards that are now basically being utilised by all funds, whether they be donor funds, whether they be private sector funds. IFC standards are incorporated for all these funds when they're working in development and developing countries. So that's a very important thing to know about and to be aware of, to make sure that you can try to meet those benchmarks as well. We then talked in session 1.2 about increasing agricultural investment in the Pacific. This is, I guess, the issue that we're trying to solve, or provide enough information so people have the tools to try to solve it. And the problem is there are a lot of funds out there. So the types of funds, whether it be a conventional bank, agricultural funds, which are deploying lots of capital in Asia, throughout Africa. You've also got timber investment management funds, or TIMOs, and then you have ethical investment funds. Now these funds need to be motivated. They need to see there is some potential for them to spend their time and money looking at a particular region. They need to mandate funds for a particular sector and a region. And right now that's not happening with the Pacific Islands. So how do you change this? And what we talked about yesterday was a project, what's called a project pipeline. So the more opportunities that can be developed that are in line with the criteria that these funds want. And some of these funds have different criteria, but I guess generally they've got to be a certain size. They've got to have all the things that I've just spoken about previously. Project pipeline's key to motivating funds to look at the Pacific, and that's really what the endeavour is of this webinar series, is to give people the tools, the information they need to get projects ready for that pipeline, so we can start talking to funds directly and get them motivated to come to the Pacific Islands. We then talked about business strategies to attract investment, whether it be through the quality of docs that align with the investor requirements, whether it be how you're going to improve your performance through technology and management governance, and how you can, I guess, how important it is to collaborate to achieve economies of scale to also get these projects of the scale that some of these funds would be looking at. And also the improvement of marketing and, I guess, supply chain integration, which are all investment very important things that investors look for. So the more understanding organisation that can be done around these areas, obviously, will be better, will attract more investment to your opportunities. Now, we then went into a bit more detail around the documents. Now, there are general documents before you start engaging with a investor. Might be independent due diligence, might be your business plan, your vision for the future, supporting technical documents to show what you have works, the processing, etc., and also a feasibility report. And then we went into a bit more detail in regards to the documents that investors require, or how do you engage with investor. So having something like a high-level teaser, which could be 1 to 3 pages, is one way to get their attention initially. And then you move on to the next stage, a pitch deck. And these are not documents to get you an investment, but these are documents to get you to an investor's desk to talk about things in more detail. A pitch deck, for example, might be 15 to 20 pages. An investor on average will take 4 minutes of their time to read it. So it's very important to get that right. And once you have that, then you talk at a business proposal or business plan that then translates into a term sheet. Term sheet, once that's agreed upon, will then translate into contracts, then into shareholders agreements, then company constitutions. So these are really important things to get right. And having been an investor for many years, I can tell you things often stop at the teaser if they're not done right, or even the pitch deck. So those two things are really important to get in front of the investors to have more meaningful and in-depth dialogue. Now, the last part that we covered off yesterday was due diligence. So this is a very long, in-depth process for the investor to validate the information from both a commercial and technical perspective to ensure that the project is investable and, I guess, as risk-free as they can make it for them to deploy their capital. So all of these things are really important and all, I guess, pretty standard investment procedures, but there are some nuances that I guess George and Tony spoke about yesterday that are applicable to the agricultural sector. Now, yesterday we did a lot of questions and answers through, I guess, people writing in questions, which is great. But today we're gonna mix it up a little bit. So when we do ask for questions and answers, if people want to raise their hands and verbalize their question, we're more than happy to try to facilitate that. So please also continue to type your questions, and we'll try to get those as best we can as well. And we'll see how that goes. But once again, all presentations are going to be sent out. So don't feel as though you have to copy every word that's being said. You'll have those presentations within a few days. But look, I think everyone's here not to hear me ramble on. I think the speaker that we all want to hear is George Kuru and Tony Wood, who are sitting in an office right now in Jakarta, Indonesia. And the first topic they're going to be covering off is improving projects with management techniques and technology. And I'll let George do a brief introduction for those that are new to this webinar. Without further ado, George, please do your stuff.
Okay, thank you, Graham. It's good to be back for the second day of this webinar, and I'd welcome again everyone to the webinar, and especially welcome the new attendants. I think I'll very quickly go over and just represent our organisation for those people who are new today. Goodness, here it is. Share. Is that coming up, Tony? Cool. Okay. So my name is George Kuru. I'm President Director of ACCOMODATING Group, which is based in Jakarta. We've been involved in the forestry and agricultural sector, servicing government organisations and commercial enterprises throughout Southeast Asia, the Pacific and Sub-Saharan Africa. We've been in existence since 2007. Myself, I'm originally a professional forester with expertise in biometrics, and I've mainly been involved in the areas of sector modelling, of project modelling and IT development services. Perhaps Tony, would you like to give a quick introduction? Oh, you're on it. Cool. Okay. Tony, who's here with us, currently not available. His background is a very strong operations background, managing large plantation enterprises in Southeast Asia and South America, and in Australia and New Zealand, Australasia. And when it comes to the nuts and bolts of day-to-day management of operations, he's our go-to person. There's a third person who's currently quite sick, and that's our financial advisor, Mark Murray, and he can't be here today, and I'm presenting some of his information as best as I can. Right, okay. I'd like to now start up the first presentation that I've prepared for today. Session 2.1. So the first presentation today is dealing with the issues of improving project investability. So that's making a project proposal more acceptable and more accessible and more available to investment organisations. And as a summary, I'd suggest there are sort of three main ways of attracting investment to a project. And one is to provide clear, complete and accurate project proposals and documentation. The second is tailoring those project proposals to address the specific requirements and preferences of the investors. And thirdly is to provide proposed documentation that anticipates the project review process and that supports fast tracking of the investment. I see a lot of project documents that have been designed by the project proponents really for themselves, and they're sort of coming from a background of a project plan or a business plan. But when we're trying to attract investors, the main audience for those documents is going to be the investor himself. So it's really looking at taking some documents and refocusing them on specifically on the investors that you're wanting to attract to the proposal. So yesterday we talked about business plans in general, and business plans specifically for agriculture and forestry type enterprises. So in general, the structure of a business plan includes the description of the business and all the details about that business, a summary of the market that you're trying to supply, an idea of the future management of the enterprise, and then finally a detailed description of the finances of the enterprise, because that's what the basis, how the investor is going to evaluate the project. Now, agriculture and forestry businesses have very specialist technical aspects that have to be built into the description of the business. And we also discussed the requirement in business plans or business proposals to address issues of sustainability, environmental sustainability, as well as social sustainability and good governance as a requirement of investment. And then the second thing that a project proponent will be preparing is the supporting documentation, the technical documentation on which the business plan was developed. And these are things like the proof of ownership of the land, a description, the company documents, detailed breakdown of costs and revenue and profit, issues around how the crop is going to be managed and harvested and distributed to downstream processes. And also a description of the environmental and community activities that you're using to engage and manage those issues, and how you're going to be monitoring, verifying and reporting the processes within the company to the shareholders of the company and to the wider community and stakeholders. So when we're talking about these documents as they're being presented to potential investors, it's really important that the content is set out in a format and in a form that's generally familiar to investors. Right? So I've seen investors, when you present them with a document, the first thing they look at is the table of contents, so that they can see what the proposal includes, and then they'll generally, first thing they'll do is they'll tick that off. And then these documents have to be presented in a clear and logical format so that they're easy to go through and understand and read and understand, because a lot of the investors may have some general understanding of the business that you're seeking investment for, but they're generally not specialists. And when there are, and the terminologies generally should be non-technical. But of course, with agriculture, there is a specific technical component, and those need to be clearly described and explained. And probably the most important thing with a business plan or a business proposal is that it can be easily referenced to the supporting data, and that the information in the business plan matches the information in the supporting data. So for example, a business proposal will have a summary financial forecast, and usually the detailed budgets will be contained within the supporting data, and those things need to match exactly, right? And when there are consistencies, those need to be explained and justified. Because really, when we're issuing these project documents, we want to create trust, and we want to create reassurance in the investor that the information you've provided is accurate and, as far as possible, true. Okay, so that's the issue of being able to provide sort of professional project documentation, so that it can be then reviewed and accepted by the investor. Now, this second issue is around addressing the specific requirement of investors. So it's really important that the pitch you make, both in terms of the pitch deck and the project plan or business plan, really matches the type of funding being offered by the investors themselves. So, is the request for investment for activities that are eligible under the investment fund itself. And it's important to match the investment request with the nature of the investment fund itself. Now, for example, funds can support a range of eligible activities. So in some cases, funds are set up as early bird investments. So they will fund an initial phase of investment and then probably exit, and a second set of investors are likely to come in. In some cases, funds are providing very specialist financial instruments to act in a sort of bridging finance role. And in other times, the sort of investment funds will fund the full project itself. So you have to understand what the role of the fund is and how it's going, and what you're asking of them for your investment itself. And then as far as possible, you need to try and match the terms of the investment pitch with what you think are acceptable or expected terms that the investor can agree to. And these relate specifically to return on investment and permissible financial risks. And it's critical really that you can understand these issues, because generally speaking, the higher the risk, the higher the return on investment that will be demanded of by the investor. So and also if there's uncertainty around what the risks are, or what the expected returns are, they will automatically look to obtain a higher return on investment. And lastly, your investment plan really needs to address compliance with environmental, social and governance requirements, which we discussed yesterday under the IFC performance standards specifically. So what I want to do now is have a look at each of these three components separately. So as we stated, there are a lot of funds out there. Most of them are servicing developing countries in Asia, Southeast Asia and South America. And to some extent, the Pacific Islands are missing out on a lot of these investment funds. Because they're not, they're not aware of them, or they're not being offered investments that are promising or properly documented. But so what I want to do is go through different types of real funds, but which service different parts of the investment cycle. So a group that we do a lot of work with is IDH, and they're primarily offering pre-investment funding, where they're looking to develop companies and develop sectors, and to the state where they can attract, the main investment. Yes, and so their role is really to boost the capacity of organisations in the area of sustainability specifically, and then go on and assist them to find investment, the main investment in the asset itself. So we'd call that pre-investment funding. Now there are a significant number of funds that look to invest early in the investment cycle and then exit, maybe even halfway through the investment cycle. And I've just put a company here, New Forest, and they quite often do that. They will invest in the early phase of a investment. They'll help build the company up and build its capabilities and value, and then quite often they will exit. Not always, they could quite often stay until the end of the investment as well. But they're an example of an early investor. This Agris fund is quite interesting in that they provide bridging finance and other financial instruments, and they assist companies to develop their basic business proposals and business plans to a stage where it's acceptable to the main financial institutions. And they're offering quite sophisticated financial instruments to support that. And then lastly, there are essentially banks or funds who are coming in to invest in projects. So I've just noted this is one of them that I've had some dealings with, the Dutch Entrepreneurial Development Bank. But you'll see here that the nature of this fund is really quite specific. It invests in food production, including agriculture, and it's geographically limited to sub-Saharan Africa, Southeast Asia, and Latin America. But you'll also notice that they have a very high focus on forest protection, agroforestry, and smallholders. So if the geographic spread went to the Pacific and your investment had smallholders, this would be a fund that would be very interesting for you and the one that you'd probably want to target. Now, if you want to increase the chances of obtaining investment in your project proposal, then I've always recommended that you prepare all the documents and information that a potential investor may need and do it in advance as much as possible. Right? Try and anticipate what the investor wants. Make sure that that data is in the investment documents, because you don't want to present a document and then the process is stalled because they're asking for further information. So where possible, you need to preempt that and try to determine in advance what the investor wants and make that available to him. And it's really preferable that you have high quality project proposal documentation, because that allows you to gain at least some control over the project review process and anticipate the reviewer needs. It also means that it sort of assists in fast tracking investment wherever possible, because you remove most of the barriers to them giving you investment funds. Now, I've prepared quite an extensive presentation now on meeting environmental, social and governance requirements of the investment funds, because it's a relatively, I suppose we started seeing these requirements and documents from about 10, 15 years ago. They're becoming now really important, okay? So obviously the main driver of investment is return on investment and minimising financial risk. But now minimising environmental and social risks are almost as important. And yeah. And so I just make the comment that international investment funds usually require at a minimum compliance of the investment with the IFC performance standards that we discussed yesterday. And I suppose there's several strategies or approaches to meeting this requirement in several steps as well. So the first step really is within your organisation creating a clear and transparent environmental social governance policy statement. And that statement should be in your project documents, and it should be on your website, and it should be public, and it should be a thing that you're prepared to back up and defend. Now, in implementing the policy, there are sort of programs and initiatives where you can implement the requirements of the performance standard. Program, which has for compliance with the standards. And a third of becoming very popular with industries is being open an industry roundtable. ESG management initiatives and targeted program. Quickly go through those. So the first thing I mentioned was the development of a environmental and social ethical policy. And this is probably the most fundamental step. It's the very first step that you'll do. And international investors require organisations to establish these policy documents as the first step. Now, the interesting thing is that especially if you have a green fields project or a project where there's no activity, then all the investors really require at this stage is a clear and a robust ESG policy. So on a number of cases, we've had agricultural investments who've gone and obtained investment based on the ESG policy alone. Right? And generally the investment funds are really happy, right? Because actually there's a shortage of qualifying projects. So it not only is establishing these sort of environmental and social mechanisms a requirement, but it's also an opportunity, because there's so many projects out there that don't qualify. So what we're saying is at the commencement of the investment cycle, the organisation only needs to describe its policies, commitments and pathways to meet those ESG policies. And generally this would be a statement, a one-page statement, acknowledging and prioritising specific environmental and ethical principles, providing a commitment to attaining certification to specified standards, having a commitment to implementing specified environmental and ethical programs, perhaps membership of commodity sustainability groups, and a timetable and a budget for implementation of its commitments with specific milestones. So that's really good news. Actually, it's if you've got a project, it's quite easy to develop a policy, and that will open the door to many of these investment funds. Now, for existing operations or existing enterprises where you're in the you're actively managing the areas and involved in real businesses, there's going to be a requirement of the funds for you to show actual activity in ESG. You may not complete it. May not have been completed, but you have to demonstrate not only a policy, but the fact that you've started in implementing some of these ESG management requirements. So there are a number of environmental and social management programs here in Southeast Asia and in Africa. It's very common to develop HCV assessments, high conservation value assessments, that identify conservation values and have a planning process to protect them. We have a HSC approach, which is more about landscape planning after the identification of high conservation values. There's another program called NDPE, which is widely implemented in Southeast Asia for avoiding deforestation, for avoiding development on peatlands, and avoiding exploitation of local communities. And then there's the program of FPIC, which ensures that the interaction that you have and the developments that you're implementing have been that you've engaged with local communities, and that you've come to agreement about how that should be managed, how community relations should be managed, and how the program itself should be managed. Now, if you don't want to implement individual programs, what you can do is that you can undertake certification under a variety of sustainability standards. So I've just listed some of them. There are really dozens of them, actually. So the big ones in this area, I suppose, are the Forest Stewardship Council, which is about sustainable forestry management. Palm oil is under the Roundtable group. There's the sustainability programs for soybean, for vegetables, for marine management, for fisheries management, for tea management, etc. Some of them are crop specific, and some of them are more just general sustainability programs. Oh, hang on. Now, some industries, especially the large industries, have their own sustainability programs, and they organise them around a roundtable approach. And the original sector, I think, to take this approach was the palm sector. But now they have similar roundtables for soybean, for beef, for biomass, and fisheries, I think. So again, that's implementing the IFC performance standards and attaining certification under the certification program that's specific to this roundtable. So really, regardless of what approach that you use for implementing sustainability project, it's generally important. It's important for a number of reasons. It's important, firstly, because the investors are demanding it. I think it's important because the consumers are demanding it. And that consumer demand is feeding through to downstream processors who are then going to the raw material suppliers and requiring that they meet these environmental and sustainable processes. So it's a significant movement, and it needs to be taken account of. But generally now there's an overall understanding of the best approaches to do this, and there's a general approach to implementing sustainability, and there are quite industry-specific standards, methodologies for implementing these sustainability programs. And generally speaking, it produces a tremendous result in terms of improvement in environmental performance, improvement in relations with communities, and overall management of the organisations themselves. That's just my opinion. So there's a lot of benefits from this integrated greening in terms of market approval and acceptance, clear and transparent sustainability commitments and outputs. It creates comprehensive and robust procedures within your organisation, so it's increasing the capacity and the capability of organisations. and it generates improved environmental, operational performance, as well as reducing costs in the long term. The reason these sort of cost and to implement the ESG and organisations to become much more systematic in their approach to management. And lastly, something that I'm going to discuss, I think in the second presentation, is that it can be quite complex and requires the use of integrated IT systems, but that generally turns out to be a benefit because it requires organisations to take on new technologies, which ultimately really improve the performance of the organisations themselves. So if we take a step back, so if you're talking about a pathway to sustainability, the first step is really creating a policy document that is embraced by the organisation to meet sustainability goals and objectives. The second step is to have a look at environmental and social action planning and implementing the environmental and social management systems required to meet your commitments. And that can be through just implementing separate programs, or it could be by participating in a sustainability standard, or participating in a industry roundtable grouping to enable you to implement those systems. And then lastly, generally there's the need to develop IT systems that support these environmental and social management programs. Actually, I won't go through this. This is something that we discussed yesterday. I'm not sure why it's in the presentation. So thank you for that. That's the presentation for this session. The next presentation is on improving the performance of organisations, agricultural enterprises, and making them more attractive to investors.
Okay, thanks, George. Look, we might just take a few questions, if that's okay.
Okay.
And we do have some that have come through. So just let me, and please, anyone that wants to speak, we can unmute you and allow your voice to travel to all of us. And please raise your hand, and we can do that as well. But Tony, do you want to pick some questions through there? Go these questions. I'll answer one of them. Use of blockchain in agribusiness. I think blockchain is just a facilitator in regards to securing transactions. So I think it can be used for any business. So I guess the answer for that is yes. But I guess at what stage do you want to implement it? I think there's probably more fundamental things that you probably need to get organised before you start thinking about blockchain. And also, I don't really know if it's going to have that much of an impact for an investor knowing that you're using it. But it certainly is something, I guess, that will be more widely used in the future.
Yeah, we have been involved in blockchain in the past, and at the moment we're also in discussions with the cryptocurrency supplier, wanting to use cryptocurrency for mainly for carbon credits, to be honest, but also with the opportunity to support environmental management systems as well. So it's definitely a possibility.
And we also have I guess a comment here that I guess is, I think, going to be really important moving forward to really capture the interest of these funds. And I'll just read it out for everyone's benefit. I recommend to have business training for landowners who need to invest in their land for agricultural forestry to learn how to do business plans, business cash flow, proposals for investors, etc. Look, I think each country certainly these standards are universal. So I think having this sort of training is really vital. To be honest, if you want to attract foreign direct investment, then there's an international standard that everyone has to meet. There are no exceptions. So I think this sort of training is essential if you want to grow your agricultural sector and attract foreign direct investment. I think pretty clear.
Yeah, Graham, what we're seeing here in Indonesia, at least on this, is the training at 2 levels. The training direct to the landowners is how to perform on a environmental and socially sustainable practices. For the actual business processes, putting the investment proposals together, normally this is done by people who are experienced either in the consulting or the banking industries, who are supported either through donors or the government to help the people put the proposals together. We find that the landowners themselves, even with training, they don't have with all due respect to them, they don't have the background on how to put a proper proposal together. So there needs to be a technically or professionally experienced person who does that for them. But very definitely there's training to the landowners on how to implement the correct practices so that they qualify for the investment that is being proposed. Okay. And they're targeted in Indonesia in particular.
Okay, great. We have another couple of questions. The first one, look, I think it's a little bit difficult to answer shortly in regards to how do we source funds and where is the source of funds and what are the requirements. I think the 2 days sort of covers a lot of that off, and I'm happy to answer that in more detail offline with a particular individual who I know. And look, I think the next one is a good question, and it's a question I think everyone's probably thinking about. But I also would just say that, in regards to, you mentioned minimum size of investment to be attractive to institutions rather than individual personal investors. Can you give us an indication of size and scale? And I'll let Tony and George answer that in more detail, but from my perspective, look, I think every investor has a different risk appetite. Maybe they have a different set of due diligence costs, and that's really going to be around a few $100,000 for most organisations. So depending on those things will dictate, I guess, the size and scale. But Tony and George, please, you guys know this better than I.
This is a difficult one to answer, to be honest. There's no...
Oh, I think we've lost you.
They will... You lost me?
Oh, you're back.
Can you hear me? Okay. Yeah, the signals here fading in and out a little bit. Yeah, there's no real fixed minimum. However, for the bigger investment funds, generally, they'll not look at anything under 30 million US dollars. Specific funds out.
Yeah, Tony, but you're cutting in and out.
To 5 million US dollars. Oh, okay.
Maybe you might want to just type that one in. But I think.
Okay. Yeah.
I think generally, look, there are different investors out there for different projects, and it's not all about CapEx. It might also be about the profitability of a particular crop versus another, whether it's a commodity item, I guess, where you're a price taker, or whether it's something that's more targeted to the premium market, which you can, could be more of a price maker. So I think all these things, I don't think there's an easy answer, but I certainly think the scale, you wouldn't be looking at anything below $1 million, given the due diligence costs, but up and above that, maybe anywhere from 2, 3, 4, 5 million and beyond. And the upper scale is limitless in regards to, I guess, size. But I guess you've got to be realistic in regards to the smaller scale, and that they've got to cover their due diligence costs, and they might spend that money and then they find that it's not suitable. So they've got to factor that into their, I guess, their costs and the sorts of projects that they invest into. But Tony will type an answer. And unfortunately, we hope that the connection to Indonesia can improve.
So Graham, are you able to restart my video?
Sure, George.
I've just been locked out for some reason. What I would say with regard to some of these funds is that there really needs to be an initiative at the regional and national level to it's not a particularly fair situation where funds are being made available to Southeast Asia, to South America, to Sub-Saharan Africa, and they're not being made available to suitable projects in the Pacific. And but this is something that needs to be addressed at a sort of regional or national level, and it's really beyond the individual investment proponents to be able to address that. So I think that's one thing that really become involved in or could facilitate with the national governments. Did you hear that, Graham?
Yeah, I did, but I'm going to turn your video off just to make sure that we can hear your voice. I mean, we love to see your handsome face as well, of course, but I think it's taken up some bandwidth. And we've got an answer on there from Tony.
All right, I'll stop my video.
Yeah, so just to read Tony's answer for everyone, and once again, we apologise for the internet connection. The minimum investment depends on the investment body. The big investment funds don't like projects under 30 million, for example. There are, however, investment funds more focused on development at the community level who will invest at the $1 to $5 million stage. So where they see it as a pilot type of project with the scope to grow and has direct and quantifiable benefits to the community. So there are so many different investors out there, and this is really, I guess, something new for a lot of people in the Pacific because they haven't been looking at the Pacific. So this is really what this webinar is about, to get everyone some information to get in shape, to be able to start engaging and talking to these investment funds with the right information, the right structures. So that's really the key of what we're trying to achieve here. And I will talk a little bit further on about a follow-up that we want to do around this in regards to potentially engaging directly with the fund to have them come in and talk about some opportunities, but we'll talk about that at the end of this webinar. But if there are no more questions, we'll take more questions later on. And I notice there's a fair few coming in here about PTI New Zealand, which we can get to a little bit later on. But, oh, one more. Yes, we are talking about US dollars. And with that, I think we can move on. George, do you want to carry on with the next session, given that we want to leave as much time as we can for Q&A at the end? Would you like to carry on?
Yes. Okay. 2.2, I think this is it. Yeah. Goodness. There you go. Can you see that?
Yes, thank you, George.
Okay. Yeah, so this session I'd like to focus more on looking at improving agricultural investment performance. Is you know, this is one of the key drivers of getting investment funds is creating profitable investments, profitable activities for the investors to direct their money towards. And it's sort of like a two-edged sword. One of the reasons that you want to improve performance is that you want to be able to attract investment to to your enterprise. And secondly, you want to be able to seek external finance to enable the improvement of operational performance through developing new cross and downstream processing capability. Secondly, to finance higher levels of management inputs that will in turn increase the business performance and profits. And lastly is making funds available to adopt new technologies that improve the efficiency of the business. So I think one area that requires investment is to have a look at existing crops and invest money in those crops to increase the production. And that's especially relevant when we're discussing, sustainability of food crops at a national level. But the other area where I'm probably more interested in this presentation is to look at alternative crops that can provide high-performing, that are high-performing from a financial perspective and create in themselves greater returns to the agricultural developer. Now this is a very fairly generous, general set of assumptions. But in the crop performance changes from year to year, but generally right at the moment, rubber as a commercial crop is really performing quite poorly. Cocoa is another crop where we're getting moderate returns. Indonesia is like the third biggest producer of cocoa in the world, but they're having trouble competing with the Africans, and it's a moderately successful crop. There's growing development of cocoa in the Pacific, I see, and a lot of that's driven by local demand, especially through the tourism sector. Coffee is going through challenging times at the moment, mainly because of climate change, meaning that the productivity of existing plantations is dropping. There's a requirement to move a lot of coffee plantations to higher altitude. And I don't think wood fibre is probably a commodity of interest in the Pacific. But I see that that's like a bit of a sunset industry where the production levels are levelling off. So it's not probably a crop you'd be, I could recommend in general terms for companies to invest in. Yeah, so what Tony's saying is correct in that wood fibre now is becoming much more attractive as a source of material for biomass and for power generation. So if I have a look at the list of high-performing crops, at least in Southeast Asia, maybe Africa, probably for very large-scale investments, palm oil is the most successful crop, generally speaking. And it is problematic. It's problematic because of its environmental history, and it's problematic, I think, from a long-term demand perspective. But it is really a really good performer. I don't think palm oil is probably should be such an important crop in the Pacific, mainly because there's not the scale of land outside places like Papua New Guinea for palm oil development. A really hot crop at the moment is palm sugar, right? And that's producing high value niche sugar products. Other things that are growing, that are developing very well is avocado and coconut. And so coconut was just a few short years ago an industry that was really the doldrums, but now it seems to have really taken off with demand for copra, demand for the shell, with demand for coconut oil in general as being very high. Now, people in the Pacific will be very familiar with breadfruit, and jackfruit is a very closely related species, and it's become something like a superfood. Now, it's one of the new superfoods, and there's already a big interest in expanding jackfruit production worldwide. Not so much in Asia, strangely, but it's very strong interest in developing breadfruit plantations in sub-Saharan Africa and South America. There's a crop here called durian. I don't know if many people in the Pacific know about it, but it's sort of a notorious sort of fruit. It has a very strong smell, but it's a tree crop that's really growing in importance very quickly. Another really interesting high-performing crop is vanilla, and there's I've just mentioned another crop. There's sandalwood, which grows mainly in Southeast Asia and the Pacific. It's a really profitable crop. Got a few photos here for you that if you've never seen a palm oil palm, that's what they look like in the top left-hand corner. In the center there is avocado, and on the right are sandalwood. Is sandalwood chips. And the Pacific used to be a major producer of sandalwood, and its importance has dropped quite a bit. But it's really a significant. It's really an important minor wood product. Actually, it's very valuable, and I think there are opportunities to resurrect that sector. In the bottom left-hand corner is durian, and this is a crop that's tremendously. It's growing very quickly. There's huge demand from China, and I don't think that demand is going to go away. In fact, there's a whole tourism industry based around Chinese coming down to Southeast Asia to eat durian. Oh, hang on. And just up here is an image of jackfruit, which I mentioned previously. It's become very popular in North America and Europe as a new superfood. And I've seen quite extensive plantation development going on in West Africa in particular, and I understand in South America as well. It's a very close relation of breadfruit, actually. So if we have a look at the strategic issues around agricultural crop selection and development, I really think there should be a preference for historical crops that have been planted regularly for a long time in locations, especially when we're talking about meeting food security purposes. And if we're looking at investment, we're looking at boosting the performance of these crops through improved genetics, increased inputs such as fertilizer, and improved management, and the development of downstream processing and improved marketing, especially collaborative purchasing from buyers. But I also think that this really leaves open the opportunity to develop new crops, and these need to be evaluated on a site using site species matching, establishing pilot projects, and investing in training and capacity building. Because generally speaking, a lot of these new crops you're able to generate much higher revenues from these specialist crops in niche markets. And then because it's a new crop, there's going to be a need for market development, maybe through vertical integration, and maybe through establishing links to existing supply chains. I've just got a little case study here. I wanted to do a couple of case studies, but I sort of ran out of time. But I find vanilla a very interesting crop. So I just want to spend a short time looking at vanilla as a crop that's growing in importance in many places in the Pacific, and how we should be developing similar crops like this. So on the left-hand side here, this is a vanilla orchard. It's using, vanilla requires shade to grow properly. And in this case, the shade is being provided by shade trees. Lyricidia is a species here. And then vanilla is an orchid species, so it has very shallow roots and grows as a vine on the trees. And it produces green beans, which you can see in the basket on the right-hand side. But those green beans really don't have any significant commercial value. The beans themselves have to be cured into this sort of black-looking bean pods, and those are what are sold on the international market. So you can see here, this is a vanilla processing facility. This one's actually in Madagascar. And on the right-hand side is the finished product. Now, in theory at least, vanilla is a very high value crop suited to smallholder production and really, in theory, ideal for the Pacific Islands. Now, it's been very successfully implemented as a crop in PNG and to a smaller degree in a couple of other Pacific Island nations. I think Niue has a very successful vanilla industry. However, as a cautionary note, it's really been less successful in several other island nations, and it's interesting to look at the possible reasons why that might be the case. So we've done several vanilla projects here in Indonesia, and what's quite interesting about vanilla is that there are several critical activities required to successfully establish a vanilla industry. And the first issue is the selection of the best species. And generally that's vanilla planifolia, which is the Madagascan variety of vanilla. But there are indigenous species, or species that are indigenous to the Pacific, which are still okay. And I think the PNG mainly use the Pacific varieties. Now, vanilla itself has very specific shade requirements, and you have to really develop the crop accordingly, either through the creation of shade houses or in the case of the previous picture, using shade trees. And it's got quite specific crop establishment and management requirements. Specifically, it's really a skilled process to pollinate vanilla. So vanilla has to be hand pollinated, and it's a highly skilled and quite challenging skill to obtain. And another issue around vanilla is that the green beans themselves really have no significant commercial value. The vanilla pods have to be cured, and preferably in a centralised processing facility. And lastly, and most problematically, you need to have access to the market to maximise the revenue from those vanilla pods. I think in PNG, they've established such a big scale that a competitive marketplace is developed. But in small island nations where they're mainly producing, a few tons of vanilla at maximum, it's very easy to be caught up in a single buyer situation. And I know that several island nations have been put in that position where a lot of the value of the crop is actually being captured by the trading entities and not by the farmers themselves. So the important thing about vanilla is it has at least 5 critical activities, all of which have to be implemented successfully for the whole sector to be successful. And if any one of those stages is not implemented properly, the whole sector will fail. So, but alternatively, if you can create the in-house expertise and the marketing systems for the product, it's a very lucrative crop. It's something that you'd want to develop, within the overall agricultural sector. The second part that I'd like to focus on is the use of technology to improve the performance of the agricultural sector. I'm talking about IT technology here, systems. Because we've seen over the last 20 or 30 years, sort of massive changes in IT, in IT control systems and the like. And to be fair, a lot of those technologies were not available or suitable for applications in the rural sector and the agricultural sector in developing countries. But over the last 10 years, I'd say that's completely changed. And what's changed now is the availability of mobile data services and mobile phones and other handheld computers at very affordable rates that allow that technology to be made available for agricultural purposes and for smallholders in particular. Oh. Right, okay. I'm just using here a system that we've been developing for the palm oil sector. And there in the palm oil sector, probably here in Indonesia, about 25% of the production is from smallholders and not large plantation companies. And there's a move towards the creation of cooperatives so that smallholders can aggregate into large enterprises. And what's been acknowledged is that those enterprises perform substantially better when they have suitable IT systems. And the IT systems are involve member registration and member administration. It supports the production, delivery and traceability of agricultural production. It allows the central organisation to monitor the performance, both in terms of agricultural performance of the individual plantations and the compliance of the members to the requirements of the wider group, the wider cooperative itself, and to administer things like grievance management and landscape monitoring. And so it's really a game breaker now, these sort of systems for these sort of cooperative enterprises, because it's really enabling them to operate in practice, and it's lowering the cost of administration of those sort of cooperative enterprises. Whoops, there you go. So the general model now is that an enterprise can develop its own centralized database applications and spatial mapping applications, and that's made available to their membership via the internet through mobile phone applications, and for more comprehensive applications through web-based, through internet-based PC applications. The sort of functionality that is involved here is member registration, so that members of a cooperative can register, and all the information that they have can be registered, and their plantations can be registered and then managed as an integrated agricultural organisation. That's and the sort of functions it's supporting is the registration of individual suppliers, the creation of supplier groups where we have clusters of suppliers and clusters of plantations, the mapping of those plantations, and the traceability of those production from each of those plantations back to the plantation owners. Now, the second thing that we can now support is the operational functionality of coordinating crop harvest and production, managing pickup and delivery of produce, verifying security and approved supply status, so that we don't have people piggybacking on the group, and we can control supply. We can control who contributes into the cooperative. And it can administer in a central location invoicing and distribution of payments to members and service providers. So we quite often come across cooperatives here that have got, several thousand members. And if you're trying to administer a cooperative that size, you just can't administer a cooperative that size with paper-based solutions. But if you have an appropriately designed IT system, it's very straightforward, actually. Another function that IT systems can support is compliance management of sustainability within the membership of the cooperative. So, when you join the cooperative, members are told that they need to start complying with the sustainability policies and programs that are in place for the organisation. We can manage roadmap activities that allow them to transition to full sustainability, and we can audit the performance of individual plantation owners within the cooperative to ensure the integrity of the compliance program. And these are the sort of activities around auditing, creating checklists, and then checking those, checking compliance, and then relating those back to the commitments that the overall organisation has for sustainability of environmental and social commitment. Okay. Another really important thing is that where you have a group of individuals and smallholders, you have a way for them to communicate their concerns and their interests back to management, and it creates a platform for individuals, for the whole group to manage grievances. And so this is it's a relatively minor part on the day-to-day operation of the system, but it's quite important in terms of maintaining membership. And lastly, our systems that we have in place to look at the wider landscape issues, especially the protection of high conservation areas and natural forest areas. Oops. So these are just sort of like screenshots of the sort of outputs that these systems have. So these sort of systems allow us to map all the individual plantations that are operated within a cooperative, and then the information of that, and then store information on that plantation, including the ownership and management of them. It allows us to implement supply chain management across the whole cooperative, from harvesting to pickup, to transportation to the mill, to processing of invoicing and payment and distribution of benefits to the individual holders. It provides us with traceability so that at any given time, if there is, we can identify who delivered what material from where to where. It allows us to manage compliance with our own with our commitments and against independent standards. And all of this really is leveraged through the use of low-cost mobile technology. So here you can see a rubber operation where people are bringing in rubber that's been collected, and it's just being loaded onto a truck. But the day-to-day logistics information is being recorded on a mobile phone, and everyone gets an inventory of the crop materials they've been supplying and calculates their payment and automatically pays into their bank account. Now, these sort of systems are really enabling a lot of these cooperative enterprises to successfully implement. Okay, so that's the end of that section. So thank you.
Thank you, George. Hello, everybody. Welcome back. I hope everyone's feeling nice and refreshed. And just to let you know that we're going to have a lot of time now for questions and answers. I guess the official part of the webinar is finished in regards to George giving us a lot of very valuable and interesting information. I just wanted to address some of the comments and some of the questions that have been raised in regards to being able to facilitate the introduction to funds and the like. We're not really going to be focusing on that in this particular webinar series. What we want to focus on is the detail and the information that you need to get in place before you even start to think about talking to a fund. You've got to go talk to a fund with basically things already done or in place. You don't get a second chance. So you've got to make sure the first meeting is going to be everything that you need and require as per this webinar series has addressed is in place. So, but what we will do is I will talk a little bit later on about a follow-up that we're going to be having to this webinar series. And there might be some funds getting involved, but let me get to that later on. Let's get to some questions and answers. But before we do, just a little bit of a recap in regards to, I guess, my thoughts around the key points that we heard from that particular section of the webinar. And I guess there's lots of crops and lots of good discussion going on in the chat room, I guess you could call it. I wasn't aware that durian, which I remember from living in Southeast Asia, and the smell of it anyway is grown in the Pacific. So that's really interesting. We had a lot of people talking about vanilla, which obviously is a very good, very investable crop right now. But we also understand that certain crops have a longer time to realize, I guess, the financial benefits. I'm not sure exactly how long vanilla takes to be grown and to mature the crop, but maybe 2.5 to 3 years. And people like cash crops. So that's something that I think needs to be looked at. And potentially there might be some answers around that, but I think those looking for the medium to long-term vanilla certainly is a crop that is of interest, and there's a lot of great success stories. And perhaps I'm going to let Tony and George manage the question and answer, but I think one of the things they will want is if there's someone out there that has a successful story, let's hear it. Let's share it with everyone here on the webinar. The other thing that I think is really important that was discussed is the scale of projects. That's a very common question. And as we talked about, the larger funds that have a lot more overheads and costs to run, they probably look at a $30 million US dollar minimum. Obviously, that's not going to be, there's not going to be many projects in the Pacific of that scale. But as we also talked about, there are a lot of investors out there that have a different risk appetite and a different capital expenditure, I guess, what they're willing to deploy. And that can be from $1 million US dollars up to $5 million US dollars, which I'm guessing most of the projects in the Pacific are going to be within that particular region. And I think also just talking about the different crops and the trends of crops and market demands, I guess it's worth giving some thought in regards to, is the crop that you're currently doing, is that going to be the crop that's going to be able to sustain you for the long-term future? Or do you start integrating new crops that can provide more return for each hectare of land that you own and that you use for agricultural developments? The other thing, I guess, following on from sustainability and everything that we discussed yesterday, which is a big trend, traceability is certainly a very big trend, and the incorporation of IT systems to manage that traceability and also to manage those supply chains. Very important to have all those things in play, not just from the investor's perspective, but also from the customer's perspective. At the end of the day, that's who is going to make your business a success or not. So I'm going to talk at the end a little bit about the follow-up and what we're planning to do and what that might mean to people, and I guess what we'll ask people to do to be prepared for that. But for now, I will hand over to Tony and George over in Jakarta to go through some of the questions that have been asked. And I've just got 4 to 5 years for vanilla, by the way, which is quite a long time. So George, Tony, please.
Okay, firstly, let's make sure you can hear me clearly now, that I'm not cutting in and out again.
Sounding good.
Okay. An easy question first. There was one about avocado, about trying to get it to market, whether it can be processed further. Yes, it can. You can turn avocado into a paste, which can then be packaged and refrigerated and has a long shelf life. So it takes away the necessity of getting the fruit quickly to market. For the lowland avocados with the thinner skins, you've really got around about a maximum of 6 weeks to get it to market before you start getting deterioration coming in. So yes, there are alternatives, perhaps not quite so financially lucrative as the fruit itself, but still worth looking into. Now, there's been a very good point made, prompted by Shelley and picked up on by Graham as well, is this integration of crops. Some of the crops we're talking about, longer term crops, avocado, vanilla, durian. It takes time for these crops to mature and start producing. The reality in a lot of these places is that the farmers are relatively poor, they don't have savings, and they need to be able to live day by day or month by month. So they need regular income. So for these high returning crops, particularly avocado is one that we read about a lot, whether it's in the newspapers or on the internet, as being a very high return, particularly in New Zealand. But it takes a long time before you get a return on your investment, because the fruit slowly starts building up after 3 years and you don't get maximum potential until about 8 years. So a project that I'm personally working on at the moment is in West Kalimantan of Indonesia, where we want to develop avocado. But we have in excess of 6,000 smallholders that we want to involve in this. These people cannot wait 6 to 8 years before they start to get a reasonable return. So what we're looking at doing is integrating with seasonal crops, corn, ginger, some short-term crops that will provide some income until the avocado starts coming on stream. This has to be supported by a company or a financial institution that is strong enough to be able to support the overall program. Now, in that particular one, sorry, my phone's going. In that particular one, what we are starting it off with, and I discussed this a little bit yesterday, was we're getting farmer cooperatives together. Now, these cooperatives have a minimum of 10 people per cooperative, better that they have 20 or 30, and they are registered with the local government. So they are a formal registered legal cooperative. Now, that cooperative then makes a presentation to one of the Indonesian banks that have been designated by the government to support agricultural development. Now, these cooperatives, they have to take a well-developed proposal to the bank. It has to show what crop is being grown. It has to show the full costs of growing that crop. It has to show where they're going to market, what the market rate is, and they have to have a guaranteed buyer. If they don't have a guaranteed buyer, then the bank will not approve it. Now, the other catch that is a little bit hard to understand and is maybe somewhat unique to Indonesia is that the bank will not actually lend to the farmer cooperatives, even though in principle, they are the people who are borrowing the money. The money goes to some sort of what we call a special purpose vehicle, SPV, that is managed by a professional body who then organises the actual planting, growing, maintenance, harvesting and sales of the product. The bank gets its money back at their time of sale, and then all profit accrues to the communities after costs for the management are taken out. Now, this is a project that is starting now. It is going to build up to a total of around about 6,000 smallholders who will be involved in this. And it is started through a cooperative, pushing from the company together with the locals to try and get development. So it hasn't come from an investment fund. It hasn't come from donors. This is a case where it's come specifically from a company working with local people in a poor community. Now, just looking.
Sorry, Tony, I've just noticed someone has raised their hand. So I might just allow them to talk if
sure.
they're ready. Here we go. I'll just, a new function for me. So hopefully this works as we intend. Okay, please mute yourself and ask away. Okay.
Graham, it's Glynis here. So Matthew, are you still online, Matthew?
Okay.
Yeah, his mic's still muted.
Yeah, I'm asking to unmute, but no go. Look,
you'll have to unmute it from that side. Matthew, can you hear?
Can you hear me?
Oh, yes, now we can. Thank you, Matthew. Go ahead.
Okay.
Oh, no, I was trying to type one of the questions earlier, but I couldn't. Then I typed raise hand. That's why I'm from Fiji. Just yeah.
Okay. So did you have a question for the panelists or not?
No, already sent it the question.
Okay.
Yeah.
All right. Can you just disable the raise hand function then on your computer?
Okay. Sorry.
Naka.
Okay.
Carry on, Graham.
Well, at least we know the hand raise function works, so everyone can be encouraged by that. So please feel free to raise your hand with any questions. Meanwhile, Tony, I'll hand over to you to address any other written questions we have in there.
Okay, the most recent one is about ginger. Ginger is a definite potential at the moment. There's a big market into China. The Chinese are looking for ginger now, particularly red ginger, and they'll take virtually any amount that can be grown. Chili, I don't know how I could live without chili, so I have to say there's a reasonable market for that. But it's not a crop that I'm personally involved in. Normally here in Indonesia, at least, chili is only grown for the local markets. You see it widely grown, but not at a large scale. It doesn't seem to be particularly profitable. So it's only done small scale for local markets. There was mention before of other crops, sugarcane, taro, and definitely the avocado. Yes, sugarcane is a good crop, but again, be wary of where you're going to sell it to. I visited 2 years ago a 6,000 hectare sugarcane project that was totally idle because the processing plant was 3/4 built and then stopped. So there was nowhere to sell the sugarcane. So all the local farmers have gone back to just growing small local crops for local markets. This is really a very important point if you're going for this funding, trying to do it at any scale. Where are you going to sell it? And do you have the economies of scale to make it attractive to the buyers? Ginger market in New Zealand. Graham, is there much of a market there? I don't get back so much these days.
I'm probably not the best person to speak to. Glenys, is that something you can talk to?
Sorry, what was this in relation to?
How's the ginger market in New Zealand?
Oh, it's huge. So I was going to say that for Pacific Trade Invest New Zealand, we, our core business is about finding, linking exporters from the Pacific to the New Zealand market, and we're always on the lookout for fresh and frozen root crops and fruit and vegetables from anywhere in the Pacific to meet the huge demand here in New Zealand. And that's a lot of what we do 9 to 5, Monday to Friday, is sourcing and looking for exporters from across any of the Pacific Island countries who have a product vis-a-vis a fresh or frozen crop or vegetable. A lot of what we do also is respond to inquiries from New Zealand importers and distributors looking for these items. So if you do have crops in the ground and you have an export plan, if you have a production plan, then just get in touch with us. We'll share you our contact details at the bottom of this or at the end of this webinar, and get in touch with my office. The other thing I wanted to say is there were some questions around assistance with respect to investment profiling and the documentation that George and Tony touched on in their presentations. And the question was directed whether this could be a service that PTI New Zealand could offer or provide to the Pacific. I think it might be worth, for those inquiries, it might be worth touching base with your IPA officials, your investment promotion agency officials and authorities, to see whether those services are in fact provided at the national level. If it isn't, and you're quite certain that it isn't, then feel free to get in touch with my office. Thank you.
Okay, there was a question as to whether there's investors interested in mushrooms. I'm not sure whether there's investors specifically focusing on mushrooms, but I do know mushrooms can be a very lucrative market. I've got a friend here in Indonesia who gave up his regular job to grow mushrooms, and he's been very successful. He's making a lot of money out of it. The only thing to be aware is mushrooms is not a very large market, it's a very specific one. But if you've got a confirmed buyer, a specific market, then it is well worth looking into. It works.
Perhaps I can say something on the market. Okay.
You there, George?
Speaker off. Can you hear me now?
Perfectly.
Hello? Yes. Okay. So there's a lot of questions about different products and their international potential. And I think generally speaking, the answer is that there's potential in a lot of crops. One of the difficulties with the Pacific and with smallholders in general is their ability to connect with the buyers. Right? So they can produce wonderful produce, and in the past it's already been quite difficult to connect their product to the potential buyers of that product. But that has changed a lot in recent times because of the internet and internet marketing and the ability to market produce digitally. And I want to give an example that's applying here in Indonesia. We live in Jakarta. It's a city of about 20 million people. And they have a large market garden system where crops come in from the surrounding countryside and are sold and then distributed to retail outlets. Now, previously, those markets were supplied by traders who would go out and purchase from producers and then aggregate them and then on-sell them to the market. And what we're seeing now is that with the use of internet technology and direct sales and marketing, that individual farmers who are often only producing a little box of vegetables can now offer those products online, and they're delivered through the electronic system direct to the market. And so with the internet, you're not limited by distance anymore. You can sell internationally. And it's really supporting things like collaborative marketing. So you can have 3 or 4 people in an island who are all producing. They can collaborate together and they can do sales and marketing to both the domestic and international markets using these sort of technologies. It's a really exciting time to be in different types of crops, provided they're suitable for the international market, because there are issues with some crops not being durable. But if you can position yourself to produce significant quantities of a high value crop, there's the possibility of being able to market those internationally throughout the world.
George, the challenge that we have in the Pacific for e-commerce, around e-commerce and anything to do with online trade, is our payment gateway.
Really?
Yeah, it's a big stumbling block for most Pacific Island countries.
What does that mean in reality, Glynis?
Payment gateways means from bank to bank. So, if you set up an online platform that allows you to trade internationally, the transaction from bank to bank is not available in the Pacific. So that's the payment gateway through the banks, and it's an issue that's been going on for many years, and an issue that the banks are trying to sort out with regional organizations and international agencies.
Yeah, that's significant, actually.
Yeah, it is.
It might be an opening or opportunity for some of these cryptocurrencies, to be honest.
Yes.
That allow alternative payment mechanisms.
George, just to, I think it might be worthwhile to take a bit of time to talk about one of the slides in your presentations, the connection between the funding agencies and the applicant. I think there's a gap there in the information, where I think it might be useful to elaborate a little bit more, which actually speaks to accessibility. So when we talk about access to finance, and you have these international donors, funding agencies out there, do they my understanding is that accessibility is through approved agencies or through commercial or development banks, not necessarily direct to the applicant. Is that correct?
Can you say that again?
So the pathway from the funding agencies and those that you highlighted in one of your slides, and I'm sure there are others out there. So the financiers or the investors of financial institutions that have the funds to support investment projects, how are those funds channeled?
Yes, if you're talking a lot of the donor funds, then those are normally channeled through government.
Yeah, no, not the donor funds. These are from international, from investors, so investment funds.
No, well, they're direct transactions between the investment fund and the project proponent.
Okay, so it doesn't necessarily have to go through government or government agency or the commercial or development bank, correct?
Not necessarily, no.
Okay. I just wanted to make that clear because for the information of the listeners. Thank you.
And I think, I guess one of the advantages of working with an organisation like Ata Marie as a consultant, in that they have, number one, the ability to ascertain exactly what the funds are looking for to make sure that when you do talk to the funds, that's everything's in place. And the other thing is that having a track record with a fund, knowing that someone's delivered on behalf of the fund, like Ata Marie, also allows the fund to have more confidence when looking at proposals that come through, I guess, a potential intermediary as well. Would that be right, George and Tony?
Yes, that's fair. Yeah. Now, to take a step back to Glynis's question, so some of these funds like to work at an industry level. So they're cooperating with industry groups, but even then that's really a direct connection. And it doesn't exclude the possibility of working through government agencies if that's possible. Right. Five. Okay. Glynis, someone has raised the issue of vivae for biogas. We're not sure what vivae is.
Same here. I was thinking the same thing.
Is it bagasse from sugarcane? Oh, it's the rain tree. Oh, I know. Is it the fruit of the rain tree or the vegetation?
The question, George, around that, just thinking outside the square, so would an agricultural investor be interested in growing a crop that, instead of going to a customer for consumption, can be used as a feedstock for a biogas project? Would that be something they'd consider, or would that be, I guess, a renewable energy funds target market?
No, in fact, we were going to raise the opportunities for bioenergy, for biomass production, and alternative renewable fuel supplies, because this is really a critical issue in the Pacific Islands, where fuel costs are really quite high, and it's quite a significant drain on foreign reserves. And I think it's actually a very important component of the whole sustainability issue. Yes, so when it comes to power supply specifically and biomass, there needs to be an understanding of the feed-in tariffs, whether or not biomass itself is competitive with the other power supply raw materials. But it's generally, you know, but it sort of didn't fall under the agricultural subject matter, but it's actually, agriculture produces a lot of biomass waste, with the potential of utilising that for renewable energy production.
So I'm just wondering, I just might ask a question if I can, George. Just going back to my days as a carbon trader, where we were doing projects in Indonesia, and you'd know all about this, where we'd work with palm oil plantations, for example, to reduce their methane from their wastewater, which is basically, we could attribute every tonne displaced from coal, taking coal-fired power from the grid. We can basically get a carbon credit for everything that they use from the methane that they produce on their own plant, and then they use that methane as gas to run their own plant, and then you sell the credits into the EU climate market. I'm just wondering, and I've been out of the game for a little while, but is there any mechanisms right now by the World Bank or the the UNFCCC, where they're actually encouraging people to do emission reductions for any of their plant operations or the like. Is there any credits or availability out there for agricultural producers in that space?
Yes, certainly. Yeah, especially where the agricultural waste is being used to displace non-renewable energy sources. Right? And the carbon market here in Indonesia is really, I wouldn't say it's exploding, but it's growing very quickly. And there's a huge amount of interest in it, and it's actually a significant part of our business now. So I'd say generally, this is a thing that Pacific Island nations should be investigating very closely, even just for the purposes of reducing foreign expenditure.
Okay, we've got some questions in the Q&A tab there, George and Tony. I don't know if you can see them or not.
Oh, I see. So Vai is the timber from rain trees, and he's right. It's a beautiful timber. It's very valuable. But like all timber operations, there's always a significant quantity of waste material. So if you have a sawmill operation, probably at least 40% is in the form of offcuts and sawdust, which can be utilised for power supply and actually also for carbon credits.
There's one question here, is there demand for tapioca starch in China? Yes, there definitely is. There's a Chinese company that is currently touring Southeast Asia looking for opportunities to grow tapioca on a large industrial scale. They are generally looking, like I say, for a large scale, but if you could aggregate enough farmers or community people together, then I believe that they would be interested in that. Dragon fruit, honestly, I don't know too much about it. There is a market, but how big it is, I'm sorry, I don't have any direct experience with that one.
I'd like to make a comment about tapioca in that I've worked on projects separately around that commodity, and there has been a significant increase in the tapioca chip price, and it's to do with demand from China as they're substituting soy feed for their animals with tapioca chip. So but that is actually due in part with the trade war between China and the US. There is the tapioca at the moment is a bit of a hot commodity, with significant increases in prices over the last few years.
There's a question here, how to get in touch with the Chinese tapioca company. There's a colleague of mine based in Auckland, New Zealand, who has been speaking to this company. He would be able to provide the contacts, but as we keep alluding to through this presentation, before you contact them, you need a proper business proposal to take to them. If you just say you're looking to grow tapioca, are they interested in buying? Then you won't get very far. But if you can go to them with a good proposal that shows the scale and the amount of production that you could do, then they may be worth talking to. I think we're...
Are we done?
There's one just come in regards to, and I think this is probably more of a industry association or a government or Chamber of Commerce probably led exercise in regards to, is there a way that we can work with other Pacific Island nations to consolidate produce in Fiji so that there is a sufficient volume for buyers and then be able to re-export overseas. I think it sounds like a hub and spoke type arrangement where you can get some economies of scale. It sounds interesting, but I don't think that this webinar really has the answers for that. I think it's something that I guess governments, Chamber of Commerce, associations can work on, but I certainly think that it's a great idea, whether it be Fiji or another country that has the right infrastructure. And I know Fiji does have a lot of things in place. I certainly think that that's what I'd be saying. If everyone here on this webinar is in the sector, in the industry, then talk to those local bodies, try to get more collaboration. And that's really what I think it's going to take, is people working together to really get the attention of these investment funds that are out there looking for opportunities.
Just going briefly back to more specific comments, I generally agree that Vai is too valuable to be used for biomass. It's a very good timber, quality timber, but it's a longer term, slightly slower growing. And there's crops such as Gliricidia that grow much faster and are better suitable for biomass. Gliricidia is something that's being looked at very closely here in Indonesia right now.
There'd be a market for waste products from
yeah, waste products are fine, of course.
I've got a question just while we're waiting for some more to come in. I was very interested in regards to the early bird investors. I guess the terminology I'd sort of use would be seed funding. I'm just wondering at what stage is early, because I guess there are different stages of early, but just generally from an agricultural perspective, what would you need to have in place to go and get some seed investment, I guess, for your project, your opportunity?
Generally speaking, the later you
Oh, George, we can't hear you very well. Could you put your microphone on? You there, George?
Yeah, he's just trying to get his microphone working again.
Oh, okay. Okay.
He's still off, George.
Is it on now?
No.
Yeah, I might have to move to Tony's. You remind me what the question was, Graham?
In regards to early stage investment, I mean, that can mean many things. I mean, I look at it as seed investment. But for agriculture, at what stage does early mean? So documents are in place, financial models done, land access. What can people take away from, how early and what is required from these investors that are looking at early stage investments?
Yeah, certainly if you're going to get seed funding, it has to be a fairly solid business proposal to convince someone to come in at that earlier stage. Generally, what we find is that if possible, you can establish a pilot project of some sort. So I've actually seen forestry teak plantation projects that were developed after say a 10 hectare block that was established as a pilot project. And that was sufficient for investors to come in and bankroll the rest of the development, right? And that was something like a 5,000 hectare plantation. So there has to be at least some initial activity going on to establish the feasibility, in my experience. Because if you're coming with nothing, if you've got no operations at all, completely greenfield, then the investors start thinking, well, why should I even bother? I can just go and develop it themselves, right?
Yeah.
So it's and yeah, seeing is believing, as Tony says. Yeah.
Okay. Any more questions?
Yeah.
Sorry, George.
No, but there is a caveat there in that, say, for example, you have the situation in the Pacific where you have a lot of communal lands and joint ownership lands. Then if you're going through the process of aggregating these areas and you've got all the titles or all the rights to use of the land secured, that's actually a very significant step, which I think people recognise. Right? And in places where where operable land is in short supply, then I think in that case there, that would be enough to take to market for seed funding.
Okay.
There is actually a lot of donor type of funding for pre-feasibility type stuff, you know, or pre-investment investment as well.
So just I guess another question until we wait for any more is the capital that is being invested. I guess does it really matter in regards to what that capex is used for? Could it be used, for example, to help digitize the operation for the latest technology for processing? It doesn't have to be all about leasing the land, or if it's freehold, owning the land. It can be for anything, I guess, that helps create a productive agricultural business. Would that be correct, or are there certain areas that the funds don't want to invest into and they put that onto the project owners?
Generally, what they look for, it can be in any form as long as it has legal status. Like I alluded to before, with the groups in Kalimantan, they register through the local government and they have a formal legal status. If it's just a loose cooperative without anything that is in writing, that is formally agreed to, then no, it becomes much tougher.
Okay, great. Look, I think you guys must have done such a great job with your presentation that all the questions seem to have, well, as I say it, have dried up. So I think what we'll do now is we'll wrap up. And first of all, I just wanted to say a huge thank you to Tony and George, who have put a lot of time into the preparation of this webinar, their first webinar, and mine, I guess, as a moderator. So I hope we've given everyone a lot of information, and we will send out, we definitely will send out all the presentations that have been given, and any other information. I guess I think George and Tony were talking about some potential other documents that might be helpful in regards to going through all the processes step by step. So don't worry, we'll definitely get that to everyone that signed up for this webinar series in the next few days. And yeah, so thank you, George and Tony. Fantastic. I've learned a lot myself. So I guess the people in the sector have probably got a lot more value out of than me. Not that I'm not interested in agriculture, but it's not my sector. But I'm very keen to help where I can, of course, through my role here at PTI New Zealand. Now, just a little bit of housekeeping, and that we will send out an evaluation form that would really appreciate people filling in and getting it back to us. And that way we can make sure that the next time we do it, we can do it even better and make sure that we take your feedback on board. And I guess just to wrap up, I'm going to just let you know about a follow-up, and then we'll have Glenys Miller, our Trade Commissioner here at Pacific Trade Invest New Zealand, making a few comments. But I think this is a really important part, so please don't leave, because this isn't the end of the story. I've been to a lot of webinars and there's been a lot of information shared, and that's fantastic. And I think, you go away and do what you want of that information, but we understand the importance of agriculture for the Pacific. So what we're proposing, and we haven't got a date locked in, but we're looking at about between 6 to 8 weeks time. We want to have another a webinar, but in this time in the shape of a workshop. And what I mean by that is we've given a lot of information about what you need to be doing in regards to preparing yourself for potential investment from foreign investors. We've also provided, I guess, some information about the crops that are attractive and some that maybe might not be so attractive that investors are looking at. We've given information around the sort of deals size that people are looking at, $1 to $5 million US. There's probably going to be more the realm of what we're going to be looking at in the Pacific Islands. But also, people that are thinking about moving into new crops, doing some thinking around that and bringing, I guess, what you've learned, your information. I mean, going away and talking to your local bodies, your next door neighbours, your farmers, your governments, and talking about how as a nation or even as a group of nations, we can get organised to do things in a more collaborative manner to make sure that these funds have no excuses for not coming to the Pacific. This is really important. So this follow-up session, what we ask is for people that have an idea or already have something in the making that they can bring along, that we can critique and go through with them on potentially, we'll pick, maybe we can't do all of them, but we'll pick ones that are going to cover the most, I guess, areas that we can. And I guess one of the points of difference, of course, we'll have George and Tony come join us again if they're free. Tony and George, are you okay with this? Of course, we've checked before. But we just need to firm up some dates. And I guess one of the other things that we're going to do as a point of difference from this particular webinar series is we want to try to get a fund or maybe a couple of funds to come along and hear it out. And I guess this is two prongs in regards to what this could achieve. Number one, it can give everyone a lot more detailed guidance in regards to what they've done and what they need to do next. But also, if people are at a stage where they do believe that they tick a lot of the boxes that we've spoken about over the last 2 days, then there's a potential for us to advertise to these funds that there is a project pipeline in the Pacific Islands. There is some reason for you guys to come down here and have a look at the islands in a serious manner and allocate funds for agricultural projects. So this is what we're proposing, and we'll certainly provide more information for you over the next few weeks. But certainly I think that is a component that I'd love to see in other webinars. But certainly for this one, we need to make sure that everyone's attended here walks away with more than just a nice warm feeling and a bit of information, but really taking it to the next level in a workshop format to help everyone refine their offerings and give a bit of guidance. But also, hopefully, we can get some funds to come and join us and show them what the Pacific's got to offer, because that is the problem right now. The funds aren't looking down here, and we want them to. So that's been one of the main purposes for this webinar series, is give everyone a bit of information about who's out there, what they're looking for, and how to go about getting things in the right shape and order. So with that, from myself, thank you everyone so much. I know 3 hours a day pretty much for 2 days is a lot of your valuable time, so we certainly appreciate it. And everyone here at Pacific Trade Invest New Zealand certainly appreciates it, as does George and Tony. And on that note, thank you, and I'll hand over to Glenys Miller, our Trade Commissioner, for some closing remarks.
Thank you, Graham. I think you've said it all. People have been online for over a couple of 2.5 hours, so I won't say too much except to echo your thanks to Tony and to George for coming on board alongside us to present this webinar series. When we were at Pacific Trade Investment, we sit here, Graham and I, and ponder upon the the opportunities across the Pacific Island countries in agriculture for investment. We are inundated with queries, but also we understand the uniqueness of the opportunities across the Pacific Island countries for investment, and the challenges that a lot of companies are faced with, including the investment promotion agencies in linking up with international and foreign investors. So in designing this workshop, this webinar, it was more so from bring in experts like George and Tony and their companies to inform Pacific Island businesses and IPAs about the opportunities, and based on their experiences, what works for them, and looking at some of those models to see whether it could be replicated in the Pacific. But also, more importantly, as Graham said, to link the purpose of this webinar was, apart from being informative, which it absolutely is, was to give a better understanding of what investors look for. And I think that's the critical thing here to take away for each and every one of you. The other point I wanted to raise, to reiterate Graham's point about these webinars, is this is the first in the series at Pacific Trade Invest New Zealand. We will be rolling out a few more between now and the end of the year. I think, Graham, we have one more on agriculture, and then we'll have, before we move into renewable energy, that's going to be an interesting one. And we plan to do a couple in that space as well. But again, our role here is really to facilitate these types of things. And we think we've done a good job this afternoon, and judging by the comments that have come through, I think it's, as I said, it's been very, very informative, and the exchange of information has been very rich. So we'll, if you have any further follow-up questions, you have Graham's email contact and mine. So just drop us a line and we'll attempt to answer your queries, or if we can't ourselves, we will put you in touch with others who may be best placed to help you. So with those few words, again, thank you very much for attending our first webinar series on investment for the year. And we look forward to your participation when next we send out an invitation and call upon yourselves again to sign up for the next one. So thank you very much.